Hey, what's going on, traders? Thanks for checking out this video. My name is Travis from Master the Market, and in this one we're going to be talking about swing trading stocks for 100% or more gains. So I'm going to break down exactly what I like to look for to find these stocks that have this explosive potential, and I'm going to show you how to not only maximize your return, but also keep your risk in check and be able to minimize your losses. Okay, so without wasting any time, let's get right into it. I want to talk about some of the things that I like to look for when I'm searching for this type of swing trade. And the first of those is going to be that it is a low float. So what a float is the amount of shares there are available to people like you and I to trade on a daily basis. So essentially it's the number of outstanding shares in total that the company has minus the ones that are held by the insiders. And really this can be thought of as the supply that there is for that stock. And if you think about anything in the world, if there's a low supply of something and there's a large demand, that's going to push the price of that item up. And really the same concept does apply to the stock market. So I like to look for these low float stocks. Generally anything under 10 million or even 20 million shares is going to be thought of as being pretty low float, because once that demand starts to increase, that's going to give these stocks the potential to have these really big runs in a very short period of time. So for example, if we look at a few of the biggest runners that we've seen over the past couple of weeks, over here on the left we have PTPI, which is a 6.7 million share float, and it spiked up over 130% on this day. BTTX is a 5.1 million share float, and it spiked up over 140% on this day. HCWB is a 9 million share float, and it spiked up over 200% on this day. And you're going to notice that that is a pretty common theme when you're looking at the top percent gainers on any given day. Most of the time, the vast majority of them are going to be a relatively low float stock. So that's definitely the first thing that I like to look for when I'm searching for these swing trades with explosive potential. The next thing that I always like to see is that the company itself has some kind of cash on hand. So ideally, this will be a positive cash flow company. But when you're dealing with penny stocks or small cap stocks, believe it or not, being cash flow positive is actually pretty rare. So another thing that I like to look for is that the company has a minimum of 2 years of cash left. And essentially that's just going to show me that the company can keep up their current operations without necessarily having to dilute their shareholders, which is something that ends up driving the price of their stock down. And one way that I like to check on a company's cash position is by going to the website dilutiontracker.com. So Dilution Tracker has a free and a paid option, but for what I'm going to show you here in this video, the free is going to be perfectly fine. So if we go up to the top, I'm just going to search in CEI, for example. CEI was a big pump and dump recently. It had a ton of attention on social media, and it ended up getting dumped back down and having a huge sell-off. And really all it would have taken for someone to avoid getting stuck in that pump and dump is to look into the company itself, see that they have a history of dilution, and see that they have no cash on hand, which all of course are red flags. So if we take a look here, we can see that this graph here is showing us the historical number of outstanding shares, which kind of represents the potential dilution that has been done in this stock. So the number of outstanding shares is consistently going up and up and up for CEI, which really just means that the company is consistently offering new shares into the market, and these offerings are diluting the current shareholders and pushing the price of the stock down. So that's going to be red flag number one. Red flag number two is if you look under cash position, you can see that this says the company has minus 6.2 months left of cash based on a quarterly burn rate of almost $500,000 and estimated current cash of minus $900,000. So in other words, this company is definitely not cash flow positive. And not only that, but they do not have any money on hand to withstand their current operations, let alone 2 years of cash left. So this is going to be something that you want to avoid. On the other hand, if we take a look at something like SYPR, SYPR I know is a lot more fundamentally sound. You can see that the number of outstanding shares historically has been about the same, telling us that they have not diluted their shareholders very much. You can also see that this is a cash flow positive company. And we can also go down to the bottom here and it says that this is a good sign. There's no relevant filings in the recent SEC filings that are going to represent dilution or any upcoming dilution. So based strictly off of the cash position and the recent dilution, SYPR is of course a much better option for a swing trade than CEI was. Okay, so with all of that being said, the third and final thing that I like to look for in terms of just general swing trading criteria is going to be that it is in a hot industry of the market. Now, when I say hot industry, I mean something like crypto, or currently electric vehicles are very popular. Previously in the past, we've seen that the cannabis industry was really hot and there was a bunch of stocks that were spiking up due to their relation to the cannabis industry. So when I'm looking for these stocks that have this explosive potential, I want to make sure that it's in an industry that is currently trending or that currently has a lot of attention on it. All right, now with those things in mind, I want to talk very quickly about a few things that I recommend avoiding when it comes to swing trading. And the first is going to simply be avoid stocks that have charts like this. I highly recommend that when you're doing your technical analysis for a swing trade to zoom out and look at the bigger picture. Check out the past 3 years, the past 5 years, even the past 10 years or longer. And if you see that the long-term chart looks anything like what we have here on the screen, that's going to be a big red flag. And really what this does is represents a history of dilution and a history of reverse splits in the stock. And believe it or not, a lot of new traders would look at this chart and they would see that currently this stock is trading at 86 cents per share. But if you look back in the past, this was trading at $200, even $300 per share. So even if this bounces up to, just a couple dollars per share, $5 per share, that would be a huge return from this current price of 86 cents. But that's not the right mindset to have. The reality is that this was never trading at $200 or $300 per share. That's simply showing us the price based on the company's reverse splits. And a very common theme with this type of stock is these weak companies that have a poor performing stock that is trending down lower and lower and lower. Once it gets to a low enough price, what they'll do is they'll have a reverse split for the stock to make it look like it's trading at a higher price. And then they'll do an offering to dilute shareholders and raise money for the company. That's going to push the price back down, and they'll repeat this process over and over and over. And eventually they'll end up with a chart that looks something like what we have here on the screen. So seeing a chart like this is definitely a red flag, and I recommend avoiding them when it comes to swing trading or investing in the market. The next thing that I recommend avoiding is going to be pump and dumps. In my opinion, you can make a lot of money with pump and dumps, but if you're not in early enough on them, they're not going to be the best for swing trading. At the end of the day, if the stock is already up 50% or 100% over the past day or a couple of days, at that point, the potential for return is not going to be worth the risk of holding on to that overnight. So I recommend maybe just focusing on day trading those types of stocks, or if you're not into day trading, just avoid them altogether. And last but not least is I personally tend to avoid small biotech companies. So the biotech industry of the market are these companies that are working on drugs or treatments for some kind of medical issue. And simply put, these tend to have very low odds of success. And the risk of swing trading these stocks is much higher than most other companies, in my opinion, because if the drug or the treatment that they're working on has any kind of negative outcome, most of the time that drug or that treatment is going to be kind of the main backbone of the company itself. So that negative news is going to have a huge effect on the stock. And I've seen these small biotech companies drop 30%, 50%, even 70% or more in a single day after just one piece of negative news was put out. So in my opinion, these are just unnecessarily high risk swing trades. Okay, so now that you know what to look for and what to avoid, I just want to give some tips on how to actually trade these stocks. And the first thing that I want to mention is that it's always going to be best to buy at or near a level of support. Not only does a support level set you up for success because the price of the stock tends to bounce to a higher price from a level of support, but it's also going to help you minimize your risk in case the trade moves against you. So if we take a look at this diagram here, we can see that there is a pretty clear level of support that the price is bouncing off of. Once that support level has been tested a few times and the price is continuing to hold above that support, that's when you would look to buy into the stock. Ideally, the price will continue to bounce off of that support and then go higher for it to be a profitable trade. But if it does break down below support, you now have a very clear level of risk that you can use to cut your loss on the trade. Okay, now another tip is even if it has a very clear level of support, it's always going to be best to scale into that position slowly. So instead of buying your entire position at once, let's say that maybe your max position size for that trade is going to be 1,000 shares. I highly recommend that you try maybe buying 100 shares at a time, because this is not only going to also help you minimize your risk, But this way, if the trade ends up taking a lot longer than expected, you're not going to have your entire position tied up right off of the bat. So you can have a small position going in this swing trade, and you can still have the rest of your money freed up to do other day trades or do other shorter term swing trades until you decide to add more into this swing position. Okay, and last but not least is going to be to set price alerts. One of the big benefits of swing trading is that you can be a little bit more hands-off than you are with day trading. So by setting these price alerts, you can kind of go along with your day without having to worry about what's going on with your swing position. You can set an alert to notify you when the stock is approaching your price target or your risk level. So that way you don't have to constantly be checking to see what's going on. And once you get that notification, you know that it's either time to lock in your profits or to cut your losses on that trade. And generally speaking, just about every broker is going to have some kind of price alert feature built into their platform. So you should be able to go right into your brokerage account or into your trading platform and set these price alerts for your swing trades. Okay, but anyway, that is going to be a wrap for this video. Hopefully you learned something and found some value in it. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos. And if you want to learn more about day trading, swing trading, and investing, I highly recommend you check out our programs at Master the Market, which is going to be the first link down below in the description. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.